We are going to receive 5,000 excess shares, so that has to be refunded. So what is your entry? Equity share application account data to equity share capital account to bank account. So what I mean by pro rata basis, whatever the excess application money what we are going to receive, how we are going to adjust. Either we have to refund that amount or it has to be transferred to allotment stage. Second entry is important actually here because it is on pro rata basis. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. My dear students, today I am going to discuss your fifth session on the unit issue of shares, and this is for second sem B.B.A students under the subject Financial Accounting and Reporting. So already in your previous 4 sessions, we have discussed few of the theoretical concepts as well as we have solved different problems under different situations. In today's session also, I am going to continue with a problem on oversubscription. Now, what I mean by oversubscription? Here, the shares are issued at par with forfeiture and reissue. So, oversubscription means what? Now, suppose if the company wants only 10,000 shares. So, do you think only 10,000 shareholders will apply for that particular share? No, there may be excess also or there may be less than that also. So, if there is excess, then what has been actually issued by the company, that is known as what? Oversubscription. Suppose if they want 10,000 shares and if the shareholders have applied for 15,000 shares, then it is known as what? Oversubscription. So today I am going to solve a problem on oversubscription. Normally your all other journal entries are same except a few journal entries you have to make the changes there. It's because oversubscription. Now go through the question here. Issue of shares at par with forfeiture and reissue. So we have forfeiture as well as reissue also, and the shares are issued at par. But the extra thing what we have is your oversubscription. Okay, so go through the question here. ABC Company Limited issued 20,000 equity shares of rupees 10 each. The amount was payable as follows. So how does 10 rupees is payable? So that is 2 on application, 3 on allotment and 5 on first and final call. So 5 plus 3, 8, 8 plus 2, 10. Okay. Now, so here the shares are issued at what? Par. So exact 10 rupees. Okay. Next, applications were received for 25,000 shares. Actually, how many shares the company have issued? 20,000. But how many shareholders have applied for the shares? That is 25,000. So this situation is called as what? Oversubscription. Actually, the company required only 20,000 equity shares, but what did the applicants do? They have applied for more than 20,000, that is 25,000 shares. So 5,000 is excess. So that is known as what? Oversubscription. Now what they are going to do with that 5,000 excess application? So excess application money was refunded. So they are going to refund that amount to the shareholders on 5,000 shares, and 20,000 shares were allotted on which the money duly received except on first and final call on 500 shares. Here also there are calls in arrears where 500 shareholders have not paid. So we need 20,000 shares. Among 20,000 shares itself, how many shareholders have not paid? 500 shareholders have not paid their first and final call money. The directors forfeited these shares and reissued to Sagar at rupees 7. They are reissued at discount. So, and fully paid up past necessary journal entries. Now we shall record entries for these 3 situations. So your application stage, now in the application stage you have to be very careful because we are not going to receive amount on 20,000 shares. We are going to receive amount on 25,000 shares. That is oversubscription. Now go through the first entry. Receiving of application money. So bank account data to equity share application account. Now here you are not going to take this 20,000, you have to take 25,000 because we have received on 25,000 shares. So 25,000 into 2 rupees. So this will be 50,000. So your narration remains same, being equity share application money received on 25,000 shares of rupees 2 each. As I told you, your narration can be in your own words. Now, second entry is equity share application account data. Now, whatever the 5,000 excess share amount what we have received, they have clearly told we have to refund that 5,000 shares. So, what is your entry then? Equity share application account data to equity share capital account. Again, because we are going to refund that 5,000 shares, so you have to write it as to bank account. So, this is an extra entry here. So, normally your transfer entry will be equity share application account data to equity share capital account. But we are going to receive 5,000 excess shares, so that has to be refunded. So, what is your entry? Equity share application account data to equity share capital account to bank account. Now, same amount 25,000 into 2 for equity share application. Equity share capital, how much actually we required? 20,000. So, 20,000 into 2. How much is excess? 5,000. So, 5,000 into 2. If you add these two, it will be 25,000 shares. Okay. So, 25,000 into 2, 50,000, 25,000, 20,000 into 2, that will be 40,000, 5,000 into 2, 10,000. Narration: being application money transferred and excess application money has been refunded. So, you can write in your own words. Now, come to your allotment stage. After allotment, it remains same. So, equity share allotment account data, since the shares are not issued at premium, so there is no securities premium. Okay, so equity share allotment account data to equity share capital account. Now, how much share you are going to take now? 20,000 only. So, because we have allotted only for 20,000 shares, because 5,000 shares already been refunded in the application stage itself. Now, allotment stage 20,000 into 3. Okay, so 20,000 into 3, so that will be 60,000 being allotment money due. Next, received bank account data to equity share allotment account. All the amount we have received with the same amount 20,000 into 3, that is 60,000. Narration: being equity share allotment money received. Now, come to first and final call. Equity share first and final call account data to equity share capital account. That would be the due entry. What is the number of shares? Same 20,000, and first and final call money is 5 rupees. 20,000 into 5. So, that will be 1 lakh. Now, did we receive first and final call money from all the shareholders? No. 500 shareholders have not paid. So, 20,000 minus 500. So, how many we have received? Only from 19,500 shareholders. So, if you see the question, here they have clearly given 500 shareholders. We have not received first and final call money. So, 20,000 minus 500. So, it will be 19,500 into 5 rupees. So, hope you are clear. 19,500 into 5, your entry is receiving of first and final call money, bank account data to equity share first and final call account. So, your narration: being first and final call money received, and the amount will be 97,500. Now, come to this forfeiture entry. So, we are going to take that 500 shareholders who have not paid their first and final call money. We are going to cancel those shares. That is known as forfeiture. So, what is your entry? Share capital account data to forfeited shares account. On which stage we did not receive? To equity share first and final call account. So, how many shares we are going to forfeit? 500 shares who have not paid. So, 500 into 10 rupees, full amount of the share, that is 10 rupees. Out of 10 rupees, how much we did not receive in your first and final call? 5 rupees. So, to equity share first and final call, 500 into 5. Then, how much we have received? So, out of 10 rupees, 5 rupees we have not received, which means that 5 rupees we have received on your application as well as allotment stage. So, it will be 500 into 10, 5,000, 500 into 5, 2,500, again 500 into 5, 2,500. Narration: being 500 shares forfeited for not paying first and final call money. So, hope you are clear about forfeiture. Now, come to reissue. So, at what price they have reissued? So, they have reissued at rupees 7. So, 3 rupees is what? Discount. So, discount has to be transferred to forfeited shares account. So, let us see the entry. So, your entry will be bank account data, forfeited shares account data to share capital account. So, we have reissued at 7 rupees. So, 500 into 7, that forfeited shares, again we are going to reissue. So, 500 into 7, forfeited shares account, that is discount 500 into 3. So, total 500 into 10. So the amount will be 3,500, 1,500 and 5,000. Next, your last entry is for forfeited shares transferred to capital reserve. So what is your entry? Forfeited shares account data to capital reserve account. So how much you have here in your forfeited shares? 2,500 in your 7th entry. Now see your 8th entry, it is 1,500. So 2,500 minus 1,500, it will be 1,000. So this 1,000 excess amount has been transferred to capital reserve. Narration being forfeited shares account transfer to capital reserve. So hope you are clear about this problem. Only excess thing was there or extra adjustment was there in this problem was your oversubscription, where you have to record in your 2nd entry. Okay, so this is how you are going to solve the problem when there is oversubscription. Now moving on to the next problem. So this is also a different situation. So we have received excess application. Then what is actually required? But we are going to consider it on pro rata basis. So what I mean by pro rata basis, whatever the excess application money what we are going to receive, how we are going to adjust. Either we have to refund that amount or it has to be transferred to allotment stage or allotment account. So that they will give clearly in the question. In your previous question, we had received 5,000 excess application money where they had clearly told we have to refund. But let us see this problem. So pro rata in the sense what? Whatever the excess application money what we are going to receive, how we are going to adjust. Either we are going to refund that amount or whether we are going to transfer to allotment. Okay. So excess application money refund and adjusted towards allotment on shares, that is allotment on pro rata basis. So this situation is called as what? Allotment on pro rata basis. Now go through the question here. Bharat Company Limited issued 10,000 shares of ₹100 each payable as under. So they have given application 20 rupees, allotment 40, and here also first and final call 40. So it is 80 and 100 rupees. So it is issued at par. That is ₹100. Next, applications were received for 15,000. Now, what happens here? 10,000 is actually required for the company, but applications received is 5,000 more, 15,000 shares, of which applications for 3,000 shares were rejected. So, we are going to reject those shares where the amount has to be refunded and the application money refunded and the remaining applications were allotted 10,000 shares on pro rata basis, the excess adjusted towards allotment. Now, how much applications we have received? 15,000. But how much actually we required? 10,000. Out of 15,000, we are going to reject 3,000 shares where we are going to refund the amount. So, remaining is how much? That is 12,000. Correct? So, 12,000. Out of 12,000, actually how much we required? 10,000. Correct? So, 10,000 we are going to allot, or for 10,000 shareholders, we are going to allot the shares. Remaining 2,000, they have clearly told excess adjusted towards allotment. So, this 2,000 has to be adjusted towards where? Allotment. Okay. All the calls were made and the money were duly received except on first and final call on 500 shares. Here also all the shareholders did not pay. So, 500 shareholders we are going to forfeit those shares and reissue. So, the directors forfeited these shares and then reissued at ₹75. They are going to reissue at ₹75, which means that 25 rupees is discount. Per share as fully paid up, pass the journal entries. Now, this is a situation, hope you have understood. So, actually we require 10,000 shares, but how many shareholders applied? 15,000. Out of 15,000, we are going to reject 3,000 shareholders where the amount has to be refunded, and 10,000 we are going to allot them the shares. Remaining 2,000, so the remaining 2,000 shares, it has to be transferred to allotment. Okay, so this is about the question. Now, let us come to the solution here. So, first entry, receiving of application money, your entry remains same, bank account data to equity share application account. Now, which number of shares you will take? This 15,000, because we have received on 15,000. So, 15,000 into 20 rupees. So, this will be 3 lakh. Your narration being equity share application money received on 15,000 shares of ₹20 each. Second entry is important actually here because it is on pro rata basis. So your entry will be equity share application account data to equity share capital account. So this will be the transfer entry till here, correct? Now what they have clearly told, equity share application 15,000 into 20, that is 3 lakh. Now how much actually we required? 10,000 into 20 will be transferred to equity share capital. Next, if you see here 3,000 we are going to reject. So how do you write? To bank account 3,000 into 20. So that will be 60,000. Remaining 2,000 what you have here, it has to be transferred to allotment. They have clearly given here adjusted towards allotment. Okay. So how do you write that? To share allotment account 2,000 into 20 rupees. So hope you are clear. So out of 15,000 shares, 10,000 we are going to allot the shares and 3,000 we are going to reject and 2,000 excess 2,000 we are going to adjust to the allotment account. So your narration will be being application money transferred to share capital account and excess application money is refunded and transferred to share allotment. So hope you are clear about this entry. This was the extra entry here. Next, third entry, that is for allotment money due, equity share allotment account data to equity share capital. So what is the number of shares? Now year after you are going to take this 10,000 shares, 10,000 into 40 rupees. So 10,000 into 40, so that will be 4 lakh. Narration being allotment money due on 10,000 shares of rupees 40 each. Now come to the receive entry, bank account data to equity share allotment account. Now, so we had 4 lakh here. But already in the second entry, we have transferred to share allotment how much? 40,000. So you have to minus that. 4 lakh minus 40,000. So this will be 3 lakh 60,000. So your narration will be being share allotment money received after adjusting excess application money of rupees 40,000. Hope you are clear. In the second entry, excess amount has been transferred to allotment stage. Now due amount minus whatever it has been transferred. So you will minus that, the remaining amount you have to receive in your allotment stage. Now your first and final call money due entry is same, equity share first and final call account data to equity share capital account. So here you are going to take how many number of shares? 10,000 into 40 rupees. Now coming to receive entry, bank account data to equity share first and final call account. So 10,000 minus 500. So it will be 9,500 into 40 rupees. Only that much we are going to receive. So receive entry is 9,500 into 40. So that would be 3,80,000. Now whatever the amount, that is 500 shareholders, we have not received the first and final call money, we are going to forfeit those shares. So your entry remains same, equity share capital account data to forfeited shares account to share first and final call account. So 500 into 100, this is the actual amount to be received, where we have not received 40 rupees, which means that we received 60 rupees. So this is how you are going to transfer, same like your earlier problems. So how many shares forfeited? 500 shares forfeited for not paying first and final call money. Now at what price they reissued? Reissued at rupees 75. So bank account data, forfeited shares account data to share capital account. So 500 into 75 we reissued, 25 is discount which has to be transferred to forfeited shares account to share capital account 500 into 100. When you multiply, you will get 37,500, 12,500 and 50,000. Now coming to your last entry, you are going to transfer your forfeited shares to capital reserve. So entry remains same, forfeited shares account data to capital reserve account. So how much was there in your forfeited shares here? That is 30,000. So 30,000 minus here 12,500. Remaining is 17,500. 30,000 minus 12,500, that will be 17,500. Narration being forfeited shares transferred to capital reserve. So this was the two problem where a quite difference were there and the shares were allotted on pro rata basis. Hope you are clear, and all the entries are same, only your second entry and fourth entry changes. So suppose if the full amount is refunded, then your fourth entry also remains same, only your second entry changes. So this is how you are going to solve the problem on pro rata basis. So my dear students, hope you have understood today's session. See you all in my next session with a new concept. Till then, take care. Thank you.